Hello everybody, good evening. Welcome to JAIIB PPB English Medium channel. I hope all of you are doing fine. Today in this particular session, we will be talking about principles and practices of banking. Now as you know that PPB is one of the examination which is the most bulky one, considered as the most bulky one. And what is the reason for that particular perception? The reason is very much simple. The number of topics, or for that matter, the number of chapters which are there in this particular subject. So we have more than 50 chapters in a single subject, and that makes the exam preparation also a tricky one, a difficult one. It is not an easy one when you talk about the PPB subject. So what should be your strategy? Strategy should be to have good discussion around module A and B. Always remember, in module A and module B you must have a command. Okay, if you have this command, then no doubt about anything you should have in your mind that whether you will crack this exam or not of PPB. So we are right now conducting the series of lectures on YouTube here itself, and we are covering the module B for all of you. Module A is done. If you have not seen the videos, it is highly recommended that go through them once, because ultimately module A will form at least 30% of your entire exam. Now let's move on to today's discussion, unit number 28, which is one of the most important unit of module B. We are talking about the NPA monitoring via the definitions of your non-performing asset, or for that matter stressed assets. What is the process, how we look into these types of assets? Let's see one by one. So when I talk about the non-performing assets, we are simply trying to understand that there are some asset, there are certain assets which are withheld by the bank. Okay, so bank has its own assets. Now these assets will be lent to somebody. Right? The lending process will happen, and ultimately this particular asset will either come back along with the profit, or as we call it, your interest, or for that matter you will have another scenario where there is no chance of making the principal as well as interest amount recovered. You are not able to recover any amount from a loan. So the first scenario where you have the assets and they are being returned fully with the principal as well as interest amount, you will say that the assets has performed whatsoever was being expected from them. So they are a performing assets. You will say that the assets which have been assigned to somebody, which has been lent to somebody, those assets have arrived back to the bank. But if we don't have any sort of asset coming back to our bank, then what will be the term we will be utilizing? These assets are not performing as they were supposed to. Okay, and that is why we term such assets where the recovery fails or the repayment schedule is not followed, we term those assets as your non-performing assets, commonly known as NPA. Okay, and when we talk about the rules, regulations, the stipulations around the Indian market being given by the RBI, our regulator of the banks, what all regulations are there? Can you term one asset as a non-performing asset even if the loan amount is not being deposited for 1 day? In single day, can a particular asset turn into non-performing asset? Answer is no. We have a stringent timeline of 90 days. We give 90 days to the customer, or for that matter to a business entity, to provide for the asset again, and at the bank's end we want that our asset should perform again. Okay, so that is how we define the NPA, non-performing asset. So what about this stressed assets? Stressed assets are those which are showing the sign of stress. Right now they are not at all having the tag of NPA, or for that matter such kind of assets which you won't be able to recover, but in future they have the potential of becoming that particular asset which is not performing according to the repayment schedule or according to what was expected out of that asset. Simply stated, you are talking about what? The non-recovery of principal plus interest. Okay. Now, let's have a discussion around some of the recommendations of Narasimham Committee, which is considered as the pioneer committee for the banking regulations. So, in line with the international practices, as per the recommendations made by the Committee on Financial System, which was chaired by Mr. Narasimham, the RBI introduced in a phased manner prudential norms. What are these prudential norms? For income recognition, asset classification and provisioning for advances portfolio of the bank. What is this income recognition and asset classification? Income recognition, asset classification simply refers to what is the income which you have earned via giving the assets to some other customer. So what all interest is there, fine, interest earning, that is the only earning, the income we are talking about from the asset. What do we mean by asset classification? So whether the asset is performing the way it should be, the way it was supposed to do, then we say that yes, asset is no longer, or for that matter, it is not a stressed asset. But if there is some situation where we find that the asset is not functioning as it was supposed to, then we call it as a stressed asset, and ultimately this stressed asset only will become the NPA, non-performing asset. So income recognition of a particular bank, asset classification and the provisioning norms, all these clubbed together, you find an umbrella term known as prudential norms. And these prudential norms are given by which committee? By the committee chaired by M. Narasimham, to move towards greater consistency and transparency in the published accounts. Fine. All those accounts which are having some type of loan setup ongoing, they must be having the IRAC norms. In your CBS also, you must have seen that various IRAC grading are there. Fine. IRAC norms you need to follow. You must have seen in the CBS also. That is what? Income recognition and asset classification. Now let's have a discussion around the NPA. Fine. What is the basic meaning of NPA? How the process starts? We have seen that. Now let's see the formal definition. So NPA simply an asset which includes the leased asset also. It will become an NPA when it ceases to generate the income for the bank. Income generation, if it is happening, you will say what? That yes, this particular asset is not at all non-performing. It is a performing asset. But when you talk about the non-performing asset, simply stated, the asset is not generating the income, the desired income for the bank. And when we talk about various types of loans, how the loan facility has defined these NPA, because for every loan facility we have a different repayment schedule, different types of schedules are there, whether the payment should be made monthly or for that matter after some other time which has been pre-decided in the repayment schedule. So when we talk about term loan, here you will find what? In the term loan, the normal loans as we call them, in the term loans you have a fixed tenure. Fine. Fixed tenure is there of the loan setup. And for the term loan, you will find that the interest and the installment of the principal remain overdue for a period of more than 90 days. Then you call it as a NPA account. So 90 days is the number which you have to remember for the exam also, because in most of the cases you will find that 90 days is the number which has been given by the RBI. Then we have the OD or the CC account, overdraft or the cash credit accounts. Here the account remains out of the order if it is not being replenished by the funds which were taken out from this OD account. Fine. Then we will say that the account has become out of order, or for that matter it is heading towards NPA. Bill purchased and discounted. So for the bills, the bill of exchange, or for that matter the payment in case of the bill purchased or the discounting, if the bill remains overdue for a period of more than 90 days, beyond 90 days, then again we will calling it as NPA. Next, for the agree credit, when you talk about the agri advance or agri credit, how you will be defining? Because most of the loan setup in the agri credit, it revolves around the crops only, because ultimately that is the source of income of the farmer. Ultimately the funds will come back to the bank once the income is there for the farmer. So when in the agri credit, we decide based on the duration of the crops. So 2 crop seasons for the short duration crop, and for the long duration crop we consider 1 crop season. Fine. Short duration crops means within 12 months. Within 12 months you have cultivated the crop, you have harvested and sold the crop in the market. But long duration, mostly you will find 18 months. We have sugarcane, fine, 18 months, around 18 months that particular crop will be in the cultivation cycle itself. So yes, if we have a 2 cropping season in which no payment has been received from the farmer's end, for your short duration crops, you will term it as NPA. The account will be termed as NPA, non-performing asset. The installment of the principal or interest thereon remains overdue for 2 cropping season. Next we have long duration crops. Again, installment of principal or interest thereon remains overdue for 1 crop season, only 1 crop season. Then we will be talking about the long duration crops. After that, when you talk about this classification, this has been amended by the RBI now. Last week only RBI has given a circular where it has amended, but that circular is not important for our exam. It is not relevant for our exam. The updates till December 2025 you have to remember, and up to December 2025 no change whatsoever was there in the cropping season, or for that matter calculation of NPA as well. Next we have the securitization transaction undertaken in terms of the RBI directions and on the securitization of assets. So for a particular asset you will be taking some security, you are providing the loan, but along with that you will be having some security also from the particular borrower. In that case, the amount of liquidity facility remains outstanding for more than 90 days, then we will term it as NPA. Liquidity facility means the particular asset which used to generate income for you as well as for the customer, that particular asset is no more functioning and the income is not reflecting in the account for 90 days. Then also you will term it as NPA. For derivative transactions, financial markets, we are talking about the overdue receivables representing the positive market to market value of derivative contract. If the contract, the earning in the contract remains overdue, the contract itself remains overdue, if these remains unpaid for the 90 days from the specified due date for your payment, then also we will call it as NPA. So various types of loan setups are there, and based on these loan setups only we will be defining that whether one particular account is NPA or not. Now there is a term that is out of order status. This is used for your CC limit or the overdraft facility, the OD facility as we call it. So here also 90 days will be the benchmark. Remember, only in case of your agri credit you will be able to have 2 cropping season, or for that matter 1 cropping season, as the benchmark of deciding whether the account has turned into NPA or not. Otherwise 90 days for your securitization transaction, 90 days for derivative transaction, 90 days for your bills purchased, or for that matter term loan also we have the 90 days. Okay, so out of order status for your CCOD, again 90 days is the benchmark. The outstanding balance remains continuously in excess of the sanctioned limit or the DP for 90 days. You have not replenished the limit once you have utilized it fully for 90 days. Now it will be termed as NPA. The outstanding balance in the CCOD account is less than the sanctioned limit or the drawing power, but there are no credits continuously for 90 days. Continuous credit, fine, continuous credit, CC limit. Both are C, continuous credit CC, and your cash credit CC. Both these you can remember like that. So continuous credit should be for 90 days. If it is not, then again NPA will be there. or for that matter the third condition, outstanding balance in this CCOD account is less than the sanctioned limit or the drawing power, but the credits are not enough, even if they are continuous, but not enough to cover the interest debited during the previous 90 days. If you are, let's suppose, continuously crediting some amount in an account where the interest itself amounts to, let's suppose, 10,000, and in total the continuous credit which you have given it only amounts to 5,000, then it won't be able to overshadow this particular balance, and again we will be having the 90-day clause, and after 90 days you will do what? Term it as NPA. Okay, fine. So this was the basic funda, that how you define NPA for various accounts. Different accounts are there, and based on the accounts only you will be deciding that whether one account is having some stress or not, and when we will be terming it as NPA. Now when we talk about the income recognition, the policy of income recognition, which was ultimately provided by the Narasimham committee's recommendation, and this particular income recognition is also a part of prudential norms. So what is this income recognition? Let's see one by one along with some examples as well. So internationally, income is not recognized from an NPA on an accrual basis, but is booked as income only when it is actually received. Fine. So principal plus interest amount. What is the actual income? The income is this also. If you recover it, then principal is also your income, the bank's income only. But we are much more focused on the interest payments, because principal more or less you will recover, but the interest earning which will reshape the balance sheet of the bank, if you are unable to recover the interest, no meaning whatsoever is for the asset which you have created just with your principal, because you already had this asset, you have not created anything. Okay, so when you talk about the income recognition, it is recognized only when you have this entire amount recovered from the customer. If not, then income recognition cannot be made. You cannot say that yes, we have recognized this as our income, even if I have just replenished the balance sheet with the principal amount. Following basic norms are to be followed for the income recognition. Various norms are there provided by the RBI again. So the bank should not charge and take to the income account interest on any NPA, including in case of government guaranteed accounts as well. So once the account is NPA, now you cannot say that yes, the recovery amount will be our income. No. This income recognition will happen if you have already settled the accounts. There is no turning back once the account is NPA. Interest on the advances against the term deposits, National Savings Certificate, Indira Vikas Patra, Kisan Vikas Patra, and life policies are taken to the income account on the due date, provided adequate margin is available in the accounts. If the margin which is present in the account, it can supersede the outstanding amount, then definitely you can term it as your income. Otherwise it cannot be termed as an income. Fees and the commissions earned because of the negotiations, the rescheduling of the outstanding debts should be recognized on the accrual basis over a period of time, covered by your renegotiated or rescheduled extension of credit. You have disbursed the advance amount to the customer, and now after the advance amount has been deposited with the customer, your balance sheet is showing the minus sign. Fine. Now whether you will be able to recover that particular amount, the credit amount, on a regular basis without extending the time period, without extending the repayment schedule, if answer is yes, then we will recognize it as your income. Next is your reversal of income. So whenever we talk about reversal of income, there are certain pointers specifically for the interest income where you will be able to reverse the same. So the income should be reversed or provided for if the same is not realized. In case of interest income, if you have not realized that yes, this particular interest earning is there in a particular account, or for that matter the loan setup, the loan facility which we have provided to the customer, then it should be reversed, one thing, or secondly provided if it has not been realized. For the fees and commission, what is the regulation? In respect of NPAs, the fees, commission and your similar income that have accrued will cease to accrue in the current period and reversed or provided for with respect to the past periods if uncollected. For collected ones, there is no looking back, no turning back, but for the uncollected one, yes, you can provide it for the past periods as well. Appropriation of recovery in the NPAs, whenever we talk about the recovery has been initiated for the NPA accounts, how the process goes, like what about the reporting, what about the interest there. So interest application, bank should reverse the interest already charged and not collected by debiting the profit and loss account. So PLN account will be debited. Mark this, very, very important. In case of appropriation of the NPA accounts for recovery, you will be debiting which account? PLN account, and stop further application of the interest. However, banks may continue to record such accrued interest in a memorandum account in their books. So whenever there is NPA, you won't be charging again and again the same interest. First thing would be what? You should, or for that matter, the bank wants to have the already given amount back in the bank. You won't be charging more and more interest once the NPA is there. Reporting of NPA. So banks are required to furnish a report on NPAs on 31st March each year, and that is the reason why most of our bankers will be very much busy in the last week of March after the completion of audit. So yes, annual closing, you have to submit various reports, out of which reporting of NPA is also one of the crucial one. Next comes the computation of your gross advances, what all advances you have provided. Gross NPAs, out of those gross advances, what all accounts have turned into NPA, no realization of income is there. Then net advances and net NPA. The net advances from these gross advances you will be calculating, and based on these net advances you will be doing what? Calculating the net NPA. So simply stated, what are these gross advances? These are the standard assets plus the gross NPA. Okay, you have to add those advances also which have turned into NPA, because that is what all you have given as the advance in the market. Gross NPA as the percentage of gross advances, how you can calculate? Simply stated, gross NPA divided by the gross advances. Simple. NPA divided by the actual advance which you have provided. This gives us the percentage, the gross NPA as the percentage of gross advances. What are the net advances? From the gross advances, just minus the deductions. Whatever the deductions are there, you need to minus that, and then only you will be having the net advances. After that, what all the deductions are there? So various deductions you can see. Provisions held in the case of NPA accounts, including the prescribed additional provisions, all the provisioning amount, it is termed as deduction. The DICGC, ECGC claims received and held pending adjustment, all those claims you have from the insurance companies, or for that matter some corporations also, that will be settled at a later time period which is pending for adjustment right now. So that is also part of it, deduction. Part payment received and kept in suspense account or any other similar account. So you have received some partial payment and you have kept that in the suspense account. Right now you cannot realize it, it will be under deduction. Balance in the sundries account, the interest capitalization for the restructured accounts. Recovery has been reinstated and the account has been restructured. For that also you will be keeping that in deductions only. Floating provisions, already the provision requirement is ongoing for some types of accounts, that is also under the deduction. So gross advances minus these deductions will give you the net advances which you have provided in the market. Next comes the net NPA. So gross NPA minus the deductions, because these deductions are what? These are the claims which are right now not settled. Net NPAs as the percentage of net advances, simple. Net NPA divided by net advances, in percentage you will be calculating that. Fine. So that's how you calculate each and every type of NPA, whether it is net NPA, gross NPA, or for that matter net advances and gross advances. Always remember these deductions. This particular information is very important. They can ask the question from these 5 deductions. Direct questions have already been asked. Now comes the asset classification. So how you will be classifying an asset? First classification is what we have studied earlier in the initial discussion only. We have discussed that the classification will be of a standard asset. Fine, you will be saying that this asset is a standard one. Why? Because the particular amount which you have lent, it will come back, principal along with interest. But if not, then how you will be classifying it further? Classification starts with the definition, that is substandard asset. First it is standard asset, coming back to you, coming back to the bank, so it will be standard one. Next is your substandard asset. With effect from March 2005, a substandard asset would be the one which has remained a NPA, out of order, or for that matter overdue for 90 days for a period less than or equal to 12 months. First of all, you will be having a standard asset. Fine, overdue for 90 days, you have the NPA, and once it is under the NPA and 12 months have passed, 12 months are gone, now it becomes the substandard asset. Okay, so when you talk about the substandard asset, it would be one which has remained NPA for a period less than or equal to 12 months. From the date of NPA till your 12 months, this time period you will call it as a substandard asset only. Then what will happen once this 12 months time lapses? Then you will find that we are talking about the doubtful asset, the second category as we called it. With effect from 31st March 2005, an asset would be classified as doubtful if it has remained in the substandard category for a period of 12 months. Fine. So whenever there is a doubtful category, we consider it classifying further, like D1, D2, D3. There are three categories specifically mentioned. Fine, all of you who have provided the proposal, prepared the proposal for NPA accounts recovery and sent it to the regional offices, the zonal offices, you must be knowing that we need to fill the D1, D2 and D3 category also in the form of NPA recovery. Fine. So when we talk about the asset which will be there in the doubtful, when it will be known as doubtful, if it has remained in the substandard category for the time period of 12 months. Fine. For 12 months it is termed as the substandard category only. Now it will be, after the 12 months you will find it as doubtful asset. We are doubtful, the bank is doubtful that if we will be able to recover or not. What about this loss asset? The doubtful asset ultimately becomes a loss asset where the bank or the internal or your external auditors or the RBI inspection has identified the loss, but the amount has not been written off wholly. Fine. There will be the write-off is the last stage, right? But in between your doubtful and write-off category, you will be having the loss asset. Right now, the RBI feels, the auditors feel, the bank feels that this is a loss asset. You won't be able to recover anything from this particular account. But formally, it has not been mentioned as a write-off. Okay. Fine. So these three categories you should remember: standard asset, 90 days NPA, NPA for 12 months, substandard asset. After that it becomes a doubtful asset, and after your doubtful asset comes the loss asset, and then the write-off happens. In between you will find that in these 90 days there will be one category, that is SMA, special mentioned accounts. So SMA 1, SMA 0, 1, 2, like that you will be having the SMA category. So till 30 days you have SMA 0, then till 60 days you have SMA 1, then 90 days SMA 2. So categorization will be there, and classification, generally why do we classify? So that we have a target, that yes, now we need to approach this particular account with utmost sincerity. We cannot have an approach where we don't know our target of recovery. Now comes the accounts with temporary deficiencies. These are the accounts which we were discussing just now. These are those accounts which are having inherent deficiencies, fine, permanent deficiencies. But there will be some accounts where you don't feel that these accounts are having permanent deficiencies. They are only having the deficiencies for the time being. In future you will see that they will replenish their balances again. Bank should not classify an advance account as NPA merely due to existence of some deficiency which are temporary in nature. Now, how as a banker you will come to know that this deficiency is temporary or not? So here are certain cases where you can say that this is only a temporary deficiency, starting off with non-availability of adequate DP. Fine. So the drawing power is not adequate. You directly cannot just say that yes, it has a permanent deficiency, let's consider it as NPA account. No. Then balance outstanding exceeding the limit temporarily, it will be replenished, but right now we see that it is having some outstanding balance. Non-submission of stock statement. So you should not have one perception that if the stock statement is not submitted, then the business is not doing good. No, there might be a scenario that the businessman or the manager of this business firm is not right now in the town, right? And non-renewal of the limits on the due date. You keep on informing the customer that yes, the renewal is pending for your specific limit, be it the CC limit or for that matter the KCC. But again, if the customer is not available on the due date, you cannot just say that yes, now this entitles the account and let's just tag this account as having the permanent deficiencies. No, these are just the temporary ones. Then we have the outstanding in the account based on the DP calculated from the stock statement older than the 3 months would be deemed as irregular. Right? The irregularity will arise if you are calculating the stock statements, all those data in the stock statement, and the data pertains to be older than 3 months. Then you will say that yes, this account has become irregular, not NPA but irregular. The working capital borrower account will become NPA if such irregular drawings are permitted in the account for a continuous period of 90 days. You know, today is day 1, let's suppose today is day 1, and you come to know that the stock statement is based on the previous, or for that matter 3-month old data. So today is the day 1 where you come to know that. Now after this day 1, when we talk about the continuous payment, or for that matter the transactions are happening on continuous basis for 90 days with this old stock statement only, then you will be terming it as what? Your NPA account, otherwise not. An account where the regular or the ad hoc credit limits have not been renewed within 180 days from the due date or the date of the ad hoc sanction will be treated as NPA. So for the renewal of the accounts, always remember, if the renewal is not done, if it is not done, the renewal is not done for 180 days, then you will say that the account has turned into NPA. Fine. The credit in your CC limit, that is a different story. Continuous credit is coming, but the renewal is not done, then 180 days. Continuous credit is not coming in your CC limit, then after 90 days only you will say this is what? Your NPA account. If arrears of the interest and the principal are paid by the borrower, the account may be classified as standard account. Right? Depending upon the bank's will, you can classify it again as a standard account once the arrears of the interest has been paid along with the principal amount. Okay. Next we have certain types of accounts which you will be regularizing on a regular basis. So when you talk about accounts regularized near about the balance sheet date, in such cases the asset classification of the borrower accounts where the solitary or a few credits are recorded just before the balance sheet date should be handled with care and without the scope of subjectivity. Whenever there are random transactions, or for that matter rapid transactions are happening in one CC limit account specifically for the business firms, you should behave like an alert banker. You should not be having any kind of perception that yes, this might be just one time case. No, it cannot be. It should be scrutinized on your end. asset classification to the borrower wise and not facility wise. You should be able to understand one thin line of difference, that the asset classification, whenever we are classifying the asset, it should be borrower wise, that a particular borrower is having, let's suppose, 3 CC limits, fine. So in these 3 CC limits, what all transactions are happening, and based on those CC limits transactions, you will be classifying the asset, not the facility wise, that yes, for CC limit facility 1 we have this classification, for the second type of borrower account we have a different classification. No, borrower wise you must maintain the record. Next is your asset classification to be borrower wise, not facility wise. Let's just have some discussion here. The bill discounted under the LC favoring a borrower may not be classified as NPA when any other facility granted to the borrower is classified as NPA. Right? One facility is classified as NPA. So can you directly say that the other accounts which are having the regular or the continuous credit, they are also NPA? No. That is the reason why we are talking about that borrower wise should be there. In case of bills discounted, when we talk about the LC, or for that matter the non-fund based facilities, if the LC or for that matter your bills discounted, they are to be classified as NPA based on the another facility's judgment that yes, that is NPA. No, you cannot do that. However, in case documents under LC are not accepted on presentation, or the payment under the LC is not made on the due day by the LC issuing bank, why the issuing bank won't be paying? Because the customer is not having money for any reason, and the borrower does not immediately make good the amount disbursed as a result of discounting of the bills. Outstanding bills discounted will immediately be classified as NPA. So if you have two types of loan facility, one is term loan which has been classified as NPA, fine, already classified as NPA, and secondly you have the another loan setup, credit setup in the form of non-fund based facilities. Let's suppose we are talking about the letter of credit. So if this account is NPA of the same customer A, you cannot just say that your non-fund based facility or the LC is also under the NPA scrutiny. No. But if the amount is overdue for, let's suppose, 90 days, the amount involved in this LC which will be provided by the issuing bank, fine, then you will term this account as NPA. Okay, not on the basis of the previous history, or for that matter if the same borrower is having 2 or 3 types of loan arrangements. What about the derivative contracts? In derivative contracts, the overdue receivables representing the positive market to market value of the derivative contract will be treated as NPA if it remains unpaid for 90 days or more. Again, 90 days will be the benchmark for the derivative contract, as we have already seen. Right? Already we have seen this derivative contracts. Next is the advances under the consortium arrangements. So you need to recover some amount from, let's suppose, a customer, but the account is not only held by you, there is a consortium arrangement. The bank arranged to get their share of recovery, fine, because the entire recovery cannot be done under the consortium arrangement by your bank only. Transferred from the lead bank or get an express consent from the lead bank for the transfer of their share of recovery to ensure proper asset classification is there in our books, fine. So consortium arrangement, that is the reason why we don't indulge that much into these arrangements, because recovery is much more complicated here, and recovery of their dues is much more complicated. Already recovery is complicated in normal accounts. In consortium though, you will be able to recover once you have the consent from the lead bank. Okay, now this was it for today's class, fine. There are n number of guidelines when you talk about the classification of the assets. N number of guidelines will be there, be it for the agri credit or for that matter your individual credit, for business loans. Everything we'll be studying in our paid classes. And one information for all of you is that the JAIIB exam registrations have been extended now till 28th of Feb. You can register. So if you have not registered yet, register as soon as possible. And after the registrations are done, you should go with the structured preparation. You need the structured preparation now, because we don't have much time left. Approximately 2 months for your preparations are left, and definitely JAIIB Mahapack 2.0 will come to your rescue if you are regular in the classes. So right now we are offering 4x validity as well as flat 81% discount on the Mahapack. You can have much more discussion around the Mahapack by calling on the number that is 0981 981 9247. And in case you want to apply the discount code for maximum discounts, you can directly apply the discount code that is Y1003. This is the code which will give you the max discount. Okay, so in case you find any difficulty in whatever we have studied today, feel free to ask me in the comment section. We'll see you guys in the next video. Till then, goodbye everybody, take care.